Hey guys, welcome to the channel. Today I want to answer questions I got. So, first of all, how do you choose a sponsor? Well, that is a very difficult and complex question, and unfortunately, there are no good answers. So, I'm going to do my best. Number one, there are a lot of deals out there, and there are a lot of syndicators, and there are no qualifications necessary to become a syndicator. You don't have to take a course or get a certification or anything like that. You can become a syndicator if you just put together the deal. A syndicator is mainly creating a team of people that will be called the general partnership team. So in a syndication, we have the general partners and the limited partners. The general partner or partners is an individual or a team or the company that is going to acquire the property, do the improvements or the development, and then manage that property over several years, and then either refinance it or sell it at the end of the project timeline, which is usually 5 years on average. So all of those decisions are going to be made by the general partners. And the limited partners are only bringing in equity. Equity is essentially cash. It's the down payment. So they take that equity and then finance the whole project. So if you have a $10 million project, and you need to go to the bank to get $10 million, they're likely going to ask for at least $3 million in cash before they will give you the remainder. And so that portion, that $3 million in cash, is raised as equity from investors. So how do you do that? First, you create an LLC. The LLC is going to own that main property. So if you're going to go buy an apartment building, you're going to create an LLC. That LLC will own that apartment building. And you will then sell shares of that LLC to investors, and the investors buys shares, gives you money. That's how you raise capital. So that's basically what they're creating as a syndication. You're creating the decision-making team, and then the limited partners are bringing in cash or their investment, and they can only risk their investment. So if you bring in $50,000, the most you can lose is $50,000. So you're a limited partner. Your financial and legal liability is limited to what you have invested. And the remainder of the liability and responsibility is with the general partnership team. And you don't need, again, any kind of qualifications to become a syndicator. So how does one go about choosing a syndicator or a sponsor? A syndicator is also called a sponsor, and if they are developing, they could be called a developer. They can also be called real estate operators. And so how do you go about choosing one? It's complicated because, like I said, there's a lot of people who may be syndicating a deal, but they don't have the proper qualifications or experience to do so. And I have run into a lot of these through my short journey. I have come across syndicators who have a very loosely associated team, and they are not well experienced, and they don't have any cohesive structure to their group, and yet they can call themselves a general partnership team and syndicate. So it's very important for us limited partners to be careful when we're selecting who we're going to invest with. And the most important things you can do are, first of all, do a background check, do a Google search. If there are any lawsuits or any news reports, anything else about that syndicator or operator, you can ask about that. It may be okay. It may not be a reason not to invest, but it's still something you should find out more about. Like, so if you do see a lawsuit or something, you should ask them, like, hey, what happened there? And then also, you can check their track record. That's always the biggest one, is like, how many such deals have they gone full cycle with, meaning they have acquired, they have improved, and exited the deals. So asking about how many such deals have they exited, how many such projects have they done? Have they only done multifamily and now are doing land development? Why the change? What happened there? Like, why did you shift from multifamily to land development? And again, it might be a completely reasonable answer. Doesn't mean that they're not a good sponsor. It's just important for you to get to know them and understand their business philosophy and what may have led to the change. And the other thing I would recommend is asking about their projected versus actual returns. because a projection is not the actual a lot of the times, right? And asking about fees. How much are the management fees or acquisition fees, disposition fees, development fees? There could be a lot of different things that are built into the um, compensation model for that developer or sponsor. So you can ask about those. Ask for referrals from prior investors. Can we speak to someone that's invested with you? They should be very forthcoming with any of these questions. These are very standard questions to ask, and they should expect these. So if you're feeling any resistance from them, then that could be a red flag. But again, I think that most sponsors would expect you to ask this. What is the succession plan if something happens to the sponsor? So speaking to their prior investors, and then also maybe with professional partners like property managers or a CPA or someone they've worked with before would also be a good person to talk to. You can also ask, do they use an independent fund administrator? Do they have audited financials? A lot of smaller companies or new companies may not have an independent fund administrator or audited financials, but it's still something good to ask. Also good to ask if they have institutional investors. If an institution is investing with them, they're likely going to scrutinize better than a retail investor. So it's important to ask if they have institutional investors and if they would provide you the names of these investors. And they may not be at liberty to provide those names, but you can still ask. So I think those are some of the things you can do to evaluate the sponsor. And I think the other thing you can do is ask your friends or family who have invested with sponsors what their experience was. And if it was a good one, perhaps start with them. And then the other most important thing is just start small. Don't put your life savings into any deal, no matter how good it is, because there are a lot of great deals. And there are not always a lot of great sponsors or syndicators. So just be careful and start small and go through a full cycle, and then you'll get a better understanding for yourself if this is someone you want to work with long term, because real estate is slow and steady. It's not going to make you rich overnight. And I don't care who promises you that you're going to become a millionaire in the next few years. You're not. Okay. Real estate is not about getting rich fast. It's a slow process. And that's why we invest in real estate, because it doesn't change too quickly. If you want to get really rich really fast, pick the best stock, and there are people on the internet that can probably advise you on that. I'm not that person. Real estate is different from stocks. It doesn't change quickly. It's not volatile. And that's the reason people like to invest in it, is that it is more stable and it's a hedge against the volatility of the stock market, hedge against inflation, meaning it doesn't correlate with those. And so that would be the reason to invest in real estate. And I know there are questions that you can obtain on the internet. If you do a Google search on what to ask a real estate sponsor, there's like about 100 and some questions you can ask. I don't know how useful that is, because are you really going to sit down with someone and interrogate them? Probably not, but choose some of those questions and maybe sprinkle them over time. If you have multiple meetings with sponsors, you can talk to them about different things over time. And then also, if they have, like, for instance, in our case, we have the fund administrator who helps answer a lot of these questions for our investors. So even if you don't want to ask the sponsor directly, if they have a fund administrator or a fund manager, that someone like me that's an intermediary, you could go through them to ask maybe questions that you may not be comfortable asking. So that's some of the ways you can choose a sponsor. And I think my biggest advice is don't get FOMO. Don't get the fear of missing out. There will always be real estate. There will always be more deals. Don't rush into anything, and just, take it slow. And then always, again, like I said previously, start with the minimum investment. There's no reason to go put in, more than you're comfortable with. Start with the minimum, go through a full cycle, see how things go, and then you'll understand yourself whether or not you want to invest with this person further. So I hope that was helpful. And if you have any other questions, please feel free to reach out. Again, my goal is to make this accessible and understandable and hopefully more enjoyable, if that's possible. I know doctors oftentimes feel like there's a target on their back and people are always hitting them up for money or trying to sell them something. And that's what a problem I'm trying to solve. I want this to be something we can take advantage of for our benefit and learn how to do that and get the right tools and resources so that we feel competent and empowered to make the choice of investing in alternative investments if we want to. So again, thank you for listening, and please like, share, and subscribe. See you next time.